Thank you again for staying with us. I know it's difficult after such a long day to keep focus, but I promise you that the next speakers are amazingly interesting because honestly, we would not be in a position to develop new products and to reduce harm if there weren't for innovators, investors, for the whole infrastructure behind our ecosystem. So our next speaker, whom I invite to the podium, is from Jefferies, and he will be speaking from his experience as a CFA and also head of the tobacco analysts at Jefferies, Mr. Andrei Andon.
Hi, good afternoon, everyone, and thank you very much for having me here. It's been an absolute pleasure listening to all of the presentations today. To start with a bit of a confession, I'm not really a regulatory expert or a scientist or an entrepreneur in the nicotine space. Rather, I work for the Jefferies Investment Bank as an equity research analyst, covering publicly listed global nicotine stocks. As such, my job basically consists of analyzing the global nicotine industry's perspectives, short-term and long-term, and the key players from a volume, a revenue, and a profitability perspective, and of discussing these insights with most of the world's largest investment funds. Going a step back, perhaps, I have been an equity research analyst for 7 years, all of them covering various sectors within the consumer staples space. My tenure started in 2018, almost precisely when tobacco stock prices collapsed, and the sector was viewed as largely uninvestable for the next 5 to 6 years. Most of our investor base at that point was refusing by default to engage on tobacco, despite the fact that the sector continued to grow sales, continued to improve margins, and to give shareholders good cash returns. Then, 12 or so months ago, we started noticing a significant change. Share prices for most tobacco stocks started increasing, all the while consumer goods space had been an increasingly difficult place to be. European spirits, for example, very much of a fallen angel in terms of investor perception as people have been cutting back on alcohol consumption. European and US food companies under pressure as sales growth is hard to come by, profit margins are coming under pressure. As time went on, global nicotine stocks continued to grow to the extent that they have now been outperforming every single other sector in consumer staples year to date. This has driven us at Jefferies to take on coverage of the global nicotine stocks again, aiming to answer what has been happening and where the industry might be heading next. We found 3 key things which, in our view, explain why the tide has indeed turned for nicotine. First of all, cigarettes. I'm mindful I'm starting with the non-novel segment in what is a New Approaches conference, but it has to be said that the traditional business model still appears to remain viable for the midterm. Cigarette volumes continue to decline, but they're still doing so at a relatively gentle pace globally, as there is some support from emerging markets to offset the developed markets' pressures. Additionally, the industry still seems to have enough pricing power to offset all those volume declines and to defend their revenues. As such, the investors that 7 years ago were predicting a very quick demise for cigarettes are kind of revising the expectations and modeling a slower glide path for cigarettes. Look, however, this would only take the stocks so far. Much more importantly, I believe, it is the smoke-free products that have driven what is a fundamental reevaluation of the nicotine investment case long-term. Smoke-free products have reached critical mass, $90 billion in retail sales values per annum, and we can now say they are here to stay as a key part of the nicotine landscape. Very importantly, smoke-free is still growing quickly and is now accounting for over a third of yearly sales growth for big tobacco names. Additionally, the companies have seen the cautionary tale of the illicit vape expansion and have proven much more adept at using branding to create competitive moats in heated tobacco, and particularly nicotine pouches. Instead of a commoditized vape-like space where it's price, its flavor, and its nicotine strength that drive the consumer purchasing decision, what we see is that consumer of heated tobacco and pouches appear to identify much more closely with the brands, some of which have indeed become household names. This has thus far helped defend the category from third-party, often illicit competition. The last thing I'll mention on this is that the companies are now increasingly proving that next-generation product investments, from a financial perspective, are paying off from a profitability angle. There is a multi-year margin improvement trajectory on display with these companies. Crucially, all these factors that I've mentioned, from the size, the growth, the branding, and the profitability in next-generation products and smoke-free, they are driving away the idea that these companies will die out when, somewhere, some day, the last smoker extinguishes the final cigarette. From being viewed akin to a gold mine, where the economic lifespan is finite, big tobacco is starting to be viewed again as set of proper consumer staples companies with very solid long-term perspectives and solid brand portfolios. The third, in our view, and final factor driving the change in the nicotine investment case we've been seeing over the last year is regulation. We now see it as, contrary to history, a partial tailwind for the nicotine space, as long as the companies continue to behave responsibly. We expect heated tobacco to continue to be tolerated as a long-term alternative to cigarettes in most of the European Union as a source of excise tax revenue, given the reduction of working age population, budget deficits, and increased defense expenditures. In US vapes, enforcement of regulation covering illicit products, of which we do detect some early green shoots from a data perspective, would unlock a significant opportunity for legal vapes. Perhaps most importantly, we see a regulatory tailwind at the moment in US nicotine pouches, with the recent pilot program fast-tracking some FDA applications for pouches, legitimizing the category long-term, opening the category to innovation, and in the current format favoring the incumbents to an extent. Going forward, we think the key spotlight from investors will remain on nicotine pouches in the US. Category already has around 4 million users in the country, is still growing over 40% year on year, and gives the highest revenue per unit, highest gross margins in global nicotine. We see multiple growth avenues mid to long term, including transitioning existing chewing tobacco and cigarette users, poly usage with vapes, and growth in the daily per capita consumption of pouches. If regulation remains favorable and the pouches growth story continues to deliver, we don't think this is the end of the road for the tobacco share price re-rating, but we believe rather the sector can continue to deliver attractive returns, and we will indeed continue to watch the space very, very closely. Thank you.
So the next speaker, I have the pleasure of inviting Huub Savelkouls, who is now the owner and founder of Scope 3 Plus Consulting, and whom I had the pleasure to work with in a previous life. Thank you.
Good afternoon, everyone. That's not a good idea. So, I think the smoke-free future is quite inevitable, but the question is, why doesn't it arrive faster? And there's so many better products around. Why are still so many people smoking? And I think that's not only true in LMICs, it's also true in countries where smoke-free products have been available for quite some time. Now, I think this is a bit of a too ambitious question to answer in a 10-minute presentation, but I'll try to shed a bit of light on that. I have about 30 years experience with the tobacco markets. I'm an economist by training. I spent a big part of my career at Philip Morris International, started my own company 5 years ago, and PMI is one of my clients, but this presentation is not necessarily endorsing the views of PMI. I thought I looked back, there were other presentations looking at the past, and I thought I looked back at the United States for the last 150 years, because it maybe informs us a bit about the future. I mean, we, for a long time, have taken cigarettes as being the only category in the tobacco domain until a couple of, 10 years ago. But if you look back longer, there were actually 3-4 big categories of tobacco products in the US that were all disrupted by cigarettes. And I think what this tells us is that, first of all, it took about 20-30 years for cigarettes to only get to a 3% market share, back about 150 years ago. But then in 20 years, it disrupted the whole market. Then the disruption was about a more affordable, easier to handle product. This time the disruption, of course, is about reducing the risks. And the reason I'm showing this graph is, one, to show how a disruption can go slow and then very fast, but also to show that I don't think it's given that cigarettes will be replaced by a single category. I think it's actually very likely that they will be replaced by multiple categories. So thinking about harm reduction, I think we need to always keep in mind the two elements of the harm reduction equation. You need a product that is less risky, but you also need a product that is enjoyable and affordable. And I think very often people in these kind of discussions take a very product-centric approach, focusing on how much does this or that product reduce the risk. And whilst that is very important, also to look at the scientific evidence, I think we sometimes overlook that we also need to take a consumer-centric approach. What consumers really like as an alternative, and what will they really switch to? And in order to better focus on that second element in this presentation, I'm proposing a new indicator, which is basically what I call the low-risk product use ratio, which is the percentage, the number of people exclusively using lower-risk products in a country divided by the total number of people using nicotine products. You can calculate this ratio on a country basis, but also on a company basis. So I'll give you a couple of examples just to give a flavor of how this can look like, or how this look like today in countries which are relatively ahead. So I'll start with Sweden example, already mentioned a couple of times before. Now, Sweden has had lower risk products in the market for more than 50 years. It's mainly snus, but also oral nicotine pouches. Vaping and heated tobacco is in the market, but it's not very big. And Sweden actually has an LPR of 74%, meaning that 74% of people in Sweden using a nicotine product exclusively use lower risk products. That's the highest I know in the whole world. Actually, smoking prevalence has basically disappeared. Below 30 years old, it's 2.3%. But even in Sweden, among 65-year-old and older people, half of them smoke cigarettes. Yeah? So there is the education, you have the products since more than 50 years in the market. More than half of people 65 years and older smoke cigarettes. So that's, I would say, the best case example. Let's look at England. So not the UK, but England, where I found data. By the way, I should have said, all these graphs are based on government data. And I also show everything not in percentages, but in number of people. Because I think too often we think only in percentages, but we're dealing with real people. And we need to see the proportions and the quantities of people in different age categories. So here you see nicotine product use in England in 2023 by age group. And you can see that the largest age group is 65 plus. That is where you have most smokers. But you see that smoking is still quite common in England across the board, even though it's often cited as a best-in-class example. In fact, the LPR in England is 13%. 13% of nicotine users exclusively use lower-risk products, and there's a lot of dual use going on, especially among people 40 years and older. This is from the Office of National Statistics. Then let's look at the United States. This button works not very easily. There it is. United States, what is peculiar about the United States is that not only do young people not smoke, young people don't use nicotine products so much at all, different from what I heard earlier on stage. I mean, it is less than 5 million people in total between the age group 18 to 24, and that's a very low percentage if you look at the total population. This may well be because of the minimum age legislation in the United States. It may well be because marijuana use is more popular than using nicotine, but that's certainly a fact. The United States is now at an LPR of 29%, so about a third of the people who use nicotine products exclusively use non-combustible products, mainly vaping and nicotine pouches. And dual use, as you can see, is quite dominant still around people 25 to 64 years old. And my final example is Japan. Japan is interesting because there is no vaping in Japan. There is Although smokeless is allowed, it is not very common. So heated tobacco products are the main products in the market there. And if you look in Japan, where it's 10 years in the market, of which you can see here 8 years because of the 2023 data, you can see that heated tobacco products are used by almost all age groups, but as in other countries, it's mainly the below 60s who use most of that. In fact, the LPR is 33%, so a third of Japanese people exclusively use lower risk products of the people who use nicotine products. And if you look at below 50 years old, it's about half of the people have completely switched to heated tobacco products. So it's not here to discuss, let's say, these specific countries, but just to give you a flavor of countries which are advanced in alternatives, how far they have progressed. And I plotted here in a different way. So here you see on the horizontal axis the age groups of these different countries, and on the vertical axis the LPR, i.e. the percentage of nicotine users who have completely switched to lower risk products. Sweden, as you would expect, on the top, because they have had these products on the market for 50 years. England on the bottom, and Japan somewhere in between. And I think Japan is quite an example because it has these products on the market much less time than the US and England. So the question is, for example, why is the progress in England going so slow compared to these other countries? And I think the answer, at least a part of the answer, is found in the acceptability of alternatives. And vaping products are popular with some people, but not popular with others. And it was quite evident from the data that I saw from Ash UK. So if you look at the people who are ex-smokers, you have about 60% saying that vaping is as attractive or as enjoyable as smoking cigarettes. But that also means that even among the ex-smokers who vape, a third still say that smoking was actually more enjoyable than vaping. And if you look at the people who switched back from vaping to smoking, 74% it is because they say smoking is actually more appealing to them, despite knowing the risk differences. So I think what is often a blind spot for some people is that, you know, different people like different alternatives, and you will have not a single switching rate across all groups and cultures, and age groups, I would say. And this is something that I think regulators need to take into account as well. So my observations are basically Sweden has advanced the most, but even in that country, half of the people above 65 who use a nicotine product smoke cigarettes. I think also looking at the data from especially England, it is very unlikely, especially when e-cigarettes are regulated as they are in the EU, that e-cigarettes are the only successor to cigarette smokers, the only alternative. The fastest transitions I am aware of globally is happening in Japan with HTPs. But I think what is invested in is research into what are the better products, what are the barriers for people to switch to alternatives, and how can we evaluate better different products and different consumer profiles in that regard. So with that, exactly on time.
The next speaker comes also from the investment world, Mattocks Swenson with L2 Ventures, and I would like to invite him to the stage. Thank you.
Good afternoon, everyone. Thank you to the conference for inviting me to speak here today. I am focused exclusively on the cannabis industry, specifically vertical software within the space. So there are a lot of themes that touch tobacco, nicotine, alc bev, pharma that cross, cannabis as well. I could sit here and talk about regulatory and all of those different veins for a very long period of time, but it would probably last 60 minutes and bore everybody to death. So I'll focus on one thing specifically today, which is how regulation informs market structure. To give you just a quick sense of what our portfolio looks like, we invest in vertical software, as I mentioned. Portfolio companies include LeafLink, which facilitates the majority of wholesale cannabis commerce in the US, Jane Technologies, which produces retail and e-commerce software. One of our other companies is Hoodie Analytics, which is a data and analytics platform that powers operational decisions for operators within the space. Today I want to talk about how regulatory approaches drive the architecture of highly regulated markets, specifically cannabis. Just to level set with everybody, cannabis today in the US is a collection of state markets, all governed very differently. So we don't have overarching federal regulation yet. So it's very complex. In regulated markets, consumer demand usually leads policy. I think somebody had mentioned the CHAMPS conference, which is an example of the pull-through that consumers want, whether those products are safe or not. Some are probably safe, a lot probably aren't, but that is what the consumer demands. We've seen this in nicotine, we've seen it in crypto, we've seen it in cannabis, and other markets as well. This creates a very strange dynamic. Operators and investors must carefully balance the ambition to build for the market that will eventually come with the necessity of timing capital allocation around today's market realities, which are often full of constraints. These industries are not merely shaped by market forces, they're architected, constrained, accelerated, or throttled by regulatory frameworks that govern them. What I'm going to explore today is how different regulatory approaches, restrictive to expansive, create vastly different market trajectories, and why long-term success depends less on predicting regulation and more to adapting to its cycles. So licensing systems, these are designed to determine who gets to play. In cannabis, limited license regimes at the state level create artificial scarcity. This drives high margins, rapid capital formation, but also entrenches incumbents and stifles innovation to some degree. Consumer prices stay high, and the illicit market specifically stays large. In contrast, more common in nicotine, offers hundreds of thousands of retail endpoints. That creates hyper competition, thinner margins, but also rapid diffusion, consumer choice, and much more product innovation. The number of licenses, vertical integration rules, and ownership restrictions don't just influence how many companies exist, they shape the capital flows, pricing power, and brand strategy of companies participating in these different markets. As it relates to cannabis, many state markets began as restrictive medical programs. This made complete sense. New compound, THC, and other cannabinoids. Not a lot of research, from a medical perspective done, and so many of these state programs were launched as a pilot test so that they could be controlled. If you look at the regulated cannabis industry in all of these states, they're tightly regulated from a testing perspective. So heavy metals, pesticides, all of the regulated products you see in New York, not all of them, but through the regulated channel, undergo substantial amounts of testing, in contrast to some of the more, some of the compounds you'd see at CHAMPS that have been, distributed now through much of the retail channels, across smoke and vape shops. In terms of how these markets develop, they start small and restrictive, but eventually they become more prevalent over time. So limited customer access relative to overall demand and concentrated supply among a small group of operators constitutes your limited license market. As competition increases, these companies need to compete in different ways, and they start to adopt practices that align with more competitive markets as regulatory capture fades. By contrast, nicotine, far more mature. Cannabis itself is, I'd say, 2 or 3 years old relative to the maturity of the nicotine and tobacco channel. It's already moved through this curve and settled into a highly expansive retail footprint that accelerates consumer access and innovation. Investors and operators need to understand where each of these markets sits on the maturity curve to pick the right strategy at the right time. Regulation is not static, especially in these emerging, highly visible industries. It moves through a cycle that's somewhat predictable. Cycle 1, prohibition or near prohibition, high stigma, high risk. Early legalization with restrictive licensing, scarcity economics and high profitability. Expansion and normalization, licensing opens, prices compress, competition increases. Mature regulation, compliance heavy but stable, favoring scaled operators. As I mentioned, because the US cannabis market is actually a collection of state markets, each state is at a different stage in this cycle. Michigan, for example, launched adult use under a loose licensing structure. Its highly competitive prices are among the lowest in the country. Consumers are happy, but margins are thin. In comparison, Illinois launched with a very limited license framework. Prices stayed high, have still remained high, innovation is low, consumer choice is low, and only now as licensing loosens are we starting to see real competition and consumer choice emerge. Restrictive frameworks favor capitalized, politically connected incumbents who can navigate lobbying, licensing, and compliance. Expansive frameworks favor nimble, consumer-centric disruptors like the gray market vape era and nicotine, where low barriers create chaos, but also viral brands and rapid adoption. Neither model is inherently better, but they produce very different dynamics. Restrictive, high initial margins, low innovation, slower category growth. Expansive, low initial margins, high innovation, faster consumer adoption. Apologies. No one knows exactly where low adoption. So in terms of where we focus on software. It's digital, asset light, and far more adaptable to changing regulatory environments than plant-touching businesses. While cultivation facilities or retail licenses can be stranded by a rule change, software can evolve with the market and scale across jurisdictions without massive capital expenditure. In a young industry with fluid rules, an unknown customer base, and many, many more unknowns, this approach has given us time to watch the market mature before picking, actual product winners. We're about a decade into the illegal cannabis legalization, and we're starting to see some of those winners emerge, but it's taken, at least 5 years to see the different types of muscles each of these companies has developed to win in what markets that they're focused on. One of the reasons we focused on software to start was because this industry is growing up in the 2025s, not the 1925s, and inherently is more digitally focused. So across our portfolio companies, we have access to significant amounts of data that can help us solve this puzzle over the long term. Lastly, I'd say the real takeaway in regulated industries, as we've been discussing today, adaptability beats prediction. And in sectors like these, the most valuable asset isn't capital or even product, it's the ability to adapt to evolving regulatory cycles. Thank you.
Hello, our next speaker comes from Ventus Medical. He's an engineer and also a senior program manager, Mr. Tim Jackson.
Yes, my name is Tim Jackson. I am an engineer specialized in electronics, and I'm also the senior program manager at Ventus Medical. The title of my talk today is Redefining Nicotine Replacement, Innovation for a Smoke-Free Future. Ventus Medical was founded by the team that was responsible for the first licensed eNRT, which is an electronic nicotine replacement therapy. And since then, I've spent the past 10 years developing a new product, nHale, which we believe represents an exciting new product category in the NRT space. So the agenda for today, first we'll begin by defining the problem that Ventus Medical is solving. Then we'll take a look at our product, nHale. I'll share with you the results of our clinical trial before we take a look at the consumer perspective in this area of development. And then I will conclude by explaining how we got here and give you some insight into our innovation journey so far. So let's define the problem. We believe that there is a need for a licensed nicotine replacement therapy which is acceptable to smokers and has the efficacy of electronic nicotine delivery systems, aka vapes. So the key takeaways here are that nicotine replacement therapy is safe, but it's just not effective enough. We have the Cochrane study, which showed that only 6% of people using NRT to stop smoking were successful. With NRT, sometimes these products can be slow to act and quite frankly can be quite unpleasant for the user. Both of these things represent barriers to quitting. When we look at vaping, it's been well discussed here today that the efficacy rates are very good in terms of helping people to kick the cigarettes. However, I have to say that ENDS products are not quite safe enough. Obviously, we welcome the news that they're very helpful in people stopping smoking, but from a medical and clinical perspective, we can't say that they're completely safe. So that's why at Ventus Medical, we want to blend the best of both worlds here. We want to use an electronic system, and we want to actually combine that with medical approval. We were very happy to hear Yach today basically endorsing the sort of foundational principle of our organization in that a licensed electronic nicotine delivery system would be the way to go. So with that, I will introduce our product, Enhale. So Enhale is a novel electronic nicotine replacement therapy. It is a culmination of 10 years of development work. It is an approved, handheld, breath-activated medical device. It's paired with a drug-containing product, so a nicotine product in the form of a cartridge. And importantly, each cartridge is session-based. So what does this mean? Well, similarly to when a cigarette is lit and there's a certain period of time that cigarette is going to take to burn, so too the Enhale device operates on a similar principle in the sense that we deliver a specific dose of nicotine over a specific number of inhalations over a specific time frame. We think this is really useful in addressing users' needs in terms of understanding how much nicotine they're actually consuming. We also think it goes some way in addressing the grazing behaviors that we see typically with ENDS products. So that's this constant, sustained, almost unconscious use throughout the day, which actually keeps nicotine levels in the body extremely high and also reinforces addiction. So Enhale is a safe and effective alternative to smoking and ENDS products and medically approved. So I will speed up a little bit because I don't have much time. What have we achieved with Enhale? So one of the main headlines here is low temperature operation. So you can see on the scale on screen how this compares to some other nicotine products. So why is this useful? Well, the rationale here is that the lower the temperature of operation, the less likely we are to generate harmful thermal degradants in the aerosol. And that's exactly what we achieved. We tested Enhale against some popular ENDS products. You can see on screen there, in the aerosol of Enhale, no metals and none of the main carbonyls that we see in ENDS products were detected. So this is great news for the consumer, it's great news for us because it indicates that we've got a safe product. Briefly, just to explain a bit of background in terms of how the product works, we have a number of patents, including a patented nicotine formulation, which allows us to use these low temperatures, minimizes the exposure for the user in terms of excipients, by which I mean any ingredient that is not nicotine. And it also gives us good product stability and shelf life. We also have patented heater design and a very deliberate airflow control. All of these things combine to give us a clean and accurate dose of nicotine in the form of an aerosol. So we're very proud of what we've achieved, but we had to put our product to the test, so we sponsored a clinical trial for Inhale. So put simply, this would tell us, number one, is our product safe? And number two, does it actually work? We wanted to compare Inhale against some existing NRTs. So for this, we used the Nicorette Quick Mist, which is an oral spray, and Nicorette Inhaler or Inhalator, depending on which country you're in. Basically, for anybody that doesn't know, these are both licensed NRTs currently available on the UK market. We completed a pharmacokinetic and pharmacodynamic assessment. So we looked at how the drug was absorbed into the body and how long for. And we looked at also the pharmacodynamics, which tells us the effect. So in this case, does it reduce the urge to smoke? So what did we learn? We learned, first of all, that Inhale is incredibly fast acting. For the time taken to reach the maximum concentration in the bloodstream was just 5 minutes, so this is similar to that of a combustible cigarette. It's faster than an e-cigarette, and it was faster than the two other licensed NRTs that were included in this trial. I will also note that the dosage of Inhale, as you can see on screen, is significantly lower than the other NRTs tested. Despite this lower dosage, we were able to find that it was actually more effective than the other NRTs in the study at reducing the urge to smoke. This was self-reported by participants during the trial. We were also able to learn that Inhale is safe, and we're able to demonstrate a safety profile which closely matched the other NRTs in the trial, and it was well tolerated by participants. So, as a consumer is often missed in this journey, we'll briefly take a look because I'm definitely running out of time. We asked the public what they view as the three most important features of an NRT product. Somewhat surprisingly to us, they really highly valued medical grade, backed by UK health authorities, and the lack of harsh chemicals in their products. We believe this marks something of a change in attitudes. At least in the UK, people are well aware of the harms of smoking. I think more so. They're becoming more aware of the harms of other forms of nicotine as well. People also valued the hand-to-mouth smoking behavior, which our product Inhale also offers. And unsurprisingly, portability and ease of use. We also asked participants about the overall appeal of Inhale as a product. Over 3/4 said they found the product appealing, and only 4% found the product unappealing. So great news for us. It's very important to gather this data. The success of Inhale as a product has to, the whole existence of the product is to really address what consumers want and need from their smoking cessation products. So how did we get here? The key point here is that this has absolutely been a marathon and not a sprint. Ventus Medical was founded in 2017. Since then, we have approved our device as a Class 2A medical device. It's CE marked for sale in the UK and EU markets. We've been able to demonstrate drug product stability. We've completed a clinical trial, as discussed, with successful results. And most recently, we have submitted a market authorization application to the UK's Medicines and Health Regulatory Agency. This marked the beginning of an 18-month process of review. As we look forward to 2017, hopefully a market launch, I'll just finish by concluding that our journey has been one of dedication, innovation, and perseverance, and we look forward to bringing a licensed product to the NRT market that closely aligns with some of these ENDS features that are so effective. So with that, I'll say thank you. I'm about to get kicked off. Thank you very much.
So we have one more presentation, and then we will convene for a 30-minute panel. The next speaker is Anand Ashok, whom you saw earlier on the panel this morning. He's CEO of Zanoprima.
Good to speak to everyone again, and thanks, Martin, for putting me as the last presentation of the day. So, Just make sure this works. So really happy to speak to everyone again, and this time have a bit more of a chance to tell you who we are. So Xanoprima is a pharmaceutical company first and foremost. We happen to specialize in the field of nicotine today, but really our aim, our vision is the improvement of public health and to be a responsible player really focused on ESG. So with this in mind, we have a very strong team which covers a range of backgrounds. So I myself, chemical engineer, spent most of my career working in the field of strategy consulting and M&A within healthcare and life sciences, but I've had a focus on growing businesses. We have Fani Kumar, who's our Chief Financial Officer, CFO, who, while being an accountant, has been in the pharmaceutical field and in fact knows a lot more than a lot of people in the pharma space himself. So we also supplement these with the stars of the show, Dr. Bill Jackson, who's at the back there, and also Dr. Ray McKay. These are chemists who have been responsible for not only developing our processes, but also taking them all the way to mass-scale production. So just want to give a little bit of background on how we've got to today. We have a really long, proud heritage within the pharmaceutical and nicotine space. The combined experience of the team even today is over 100 years across these sectors. Unfortunately, we lost my father, who was the founder of the company in 2014, who himself had 45 years experience, which I've not even included in that. So we've grown from this experience that he had within the pharmaceutical and particularly NRT space since the mid-1990s. He was in fact the first to launch NRT products into India. He had an uncle who happened to have passed away from oral cancer, which unfortunately plagues our home country of India. And this was a big motivation for him to ensure that he brought products to market that could hopefully stop this in the future. Following this, he actually set up a contract manufacturing organization, which was responsible for the production of Johnson & Johnson and GSK NRT products in the Asia Pacific. So a lot of the Nicorette products were actually produced in the facility that he founded. And following this, he very rapidly moved into innovating the field of nicotine itself, where GSK had approached him wanting a fully traceable source, and he set out to develop a process for the production of synthetic nicotine. So Xanoprima was founded in 2014, and over the years, we brought in the rest of the team who helped to develop the process initially on a lab scale, and then all the way through to mass production in 2021. And since then, we're very proud to say we've worked with a range of clients, all the way from startups up to big tobacco. And so we're making an impact in the society. So as mentioned, our focus as a pharmaceutical company has been to innovate. And we have created intellectual IP in 3 key areas. We have a process patent for our synthetic nicotine, which allows us to create a cost-competitive synthetic nicotine with an extremely good ESG score in terms of lower carbon emissions compared to tobacco-derived nicotine, and also very low water usage. We also have 2 product patents, one for a vaping formulation, which is valid across over 55 geographies now, and also for a pouch formulation, which has already been granted in the UK and other geographies are pending. So just want to talk very briefly on our process. I'll be brief. It stops me having to also go into too much detail myself. So the key here is that we utilize green chemistry in our process. what does this allow us to do? It allows us to drastically reduce the carbon emissions, but also the water impact is net zero, as you'll see in a coming page. So we have a patented enzymatic conversion. We start with myosamine, which is an alkaloid naturally found in tobacco also. And then this is converted using an enzymatic process to S-nornicotine, using what we call an amine reductase system, and then it's methylated to S-nicotine. Following that, it's isolated and purified by distillation. So how are we different from other synthetic nicotine, which has been around for a while? The key thing is that we directly produce synthetic S-nicotine. Now, this is identical to the nicotine found in tobacco. So we don't have the issue of having multiple isomers, the R and the S isomer of nicotine itself. The R isomer has, its properties are not well documented, and it does not have the same biological effects. So it's very important that we produce effectively pure S-nicotine. There are some others who are producing the racemic mixture and then using a resolution process, but this is highly wasteful. It increases the cost, and it's a horrible environmental impact also. So if I also look at this in comparison to tobacco, like why you would say, well, if it's identical, why not just go from tobacco? Well, we have a number of key advantages which I'd like to talk about. The first thing is that we produce and we have control of the process, and we're able to produce it in an FDA-approved pharmaceutical facility with full traceability. This gives us significant advantage, although other players are now looking to trace back to a specific field and potentially trying to do the work. We have all the documents ready, and people can get that full comfort on traceability. This also means that we have full control over the supply chain, the workforce, and in fact, there has been some controversy in recent news where some companies have been accused of child labor. We can ensure that we stop or at least control that and ensure that this is not happening. As it's not extracted from tobacco as well, it doesn't have TSNAs or heavy metals, which is extremely important. Also, the final thing is our ESG credentials. So if I go to the next page, you'll see that we can significantly reduce carbon emission by using our synthetic nicotine process. Now, if we compare with other tobacco-derived nicotine, we can reduce carbon emission by over 50%, and this is something which has been verified multiple times. And also, with regards to the water, I will caveat these numbers, as recent studies have contested some of these figures on the water exact amount. But having said that, we still have a substantial saving on this, given we have a net, in fact, our process net produces water. Since the studies, we've actually been able to reduce the carbon even further, because we realized that the nitric acid that we'd used as to create one of the precursors was actually releasing nitrous oxide, which was a core reason for our carbon emissions being higher than what they could be. We have now managed to reduce by 13% by tweaking this earlier stage as well. We also have the potential to go down another 36% by making some changes, by changing a supplier also, which we're looking into also at the moment. I'm going to go through the last two slides very quickly. So the first thing, I just want to talk a little bit about our vaping formulation. So we have a nicotine CO2 vaping formulation, which has been patented to over 50 countries, as mentioned. The key thing here is that we came from the pharma side, so our focus was on reducing risk for potential lung damage, and the concept here is that we did that by removing organic acids and other solvents, which allows us to have a stable formulation which allows greater intake while reducing the risk of lung damage. I'm going to skip through to the last one, which is our nicotine pouches. So again, looking at this from the pharma angle, our key focus here was that nicotine pouches, particularly those such as Zyn, were known to be using sodium salts such as sodium bicarbonate to stabilize the product itself. And what we wanted to do was to reduce the sodium intake of people who were using nicotine pouches. So we developed a formulation using calcium silicate, known as E552, standard food and pharmaceutical excipient, and we use citric acid to stabilize. So we can actually achieve very high nicotine loading levels while not having to use high amounts of sodium. We do have a PMTA application accepted. I'll talk to you about that a little bit more, but I know that we're running out of time. And we're looking to work with partners to hopefully bring this product to market and have a positive impact on public health through that. We can also use this in gums and lozenges, this particular approach, and we already have a patent granted in the UK for both the premix and the pouch itself, with other countries pending. Sorry for going slightly over, Patricia, but thank you very much for the opportunity, everyone, for speaking to you. And Bill and I, in particular, will be very happy to speak to you further later on. Thank you so much.
So I would like to invite our panelists, Owen, Huub, Andrei, and Mattocks, to the stage. It's about investment, and the backgrounds of the gentlemen here certainly will help set the stage. Thank you. So I will actually start with Mattocks, because I was dying to ask you a question, right after your speech. Obviously, you have been investing in adjacencies to a highly regulated industry, but also one that is not really that predictable. Compared to the cannabis industry and to the uncertainties and the fact that, shall I remind you, it's still federally illegal, why do we find so many investors reluctant to look at the nicotine space, although the nicotine space shows growth? Just the size for nicotine pouches, the size of the market of nicotine pouches is predicted to be many billions in a number of years. And yet we still find reticence. And if you can start the discussion by sharing, and then I'll turn to each of you for a few comments, a few thoughts about that, and also anything else that you wish you could have shared during your presentation.
Yeah, I think Owen and Andrei will be able to give some insight into this. I think as it relates to cannabis, when the initial wave of investment came, it was very much sentiment driven. New market, big market coming online, and there weren't a lot of folks that appreciated the challenges around regulatory, market structure, et cetera. So I think sentiment drives a big, is a big driver of capital formation. As it relates to nicotine, I mean, without being deeply in the nicotine space, I think there's been a substantial amount of innovation that's happened over the last 5 years, really. So my guess would be, there's a stigma element to both of these markets in some respects, but it does seem like the excitement around nicotine and dollars that are flowing into the nicotine space are actually starting to accelerate on the back of some of the financial performance we see from a sector that was, quote, uninvestable even 3 or 4 years ago. So I think it's a combination of market sentiment and confidence in that growth trajectory, as well as, getting over years and years and years of cultural stigma.
Thank you. Owen?
Yeah, a good insight into this from my past life in equity research, when I used to speak to investors and they'd air some of their concerns around the space. It kind of boiled down to, I guess, 4 key things. Number one, misperceptions that we've spoken about today. They didn't necessarily believe these products were safer than cigarettes. We actually did a survey amongst buy-side investors around 2 years ago now, and 70% of respondents either believe nicotine gave you cancer or they didn't know. Number two, concerns around the regulatory outlook. It's always changing. You don't know if you invest in something if that market's going to be cut off, there's going to be a disposable ban, etc. The following week. Third, concerns around the economics and would they ever match those of cigarettes. And I'd say the fourth thing is, especially around vape now, is concerns around fragmentation and the lack of consolidation and therefore the ability to actually make money in a market like that.
Understood. Well, the reality of it is that everyone has different perspective. Going back to Andrei, of course, you're looking more at institutional investors, but I presume that you do talk to all types of investors, right, throughout your activities. What's your perspective in what could stimulate innovation, and how could really the investment community and all of these wonderful businesses come together, and what would be a good platform to do it?
So there's quite a few things to add. Number one, I would say a lot of the investor perception, to Owen's point, that was negative a few years ago, has already changed quite substantially. There's a much higher understanding of the fact that these products are indeed lower harm, that they're safer. I think the message is to a good extent out there, to the extent that investment funds the long-term structural investors who wouldn't have looked at the space a few years ago are now actively looking to reinvest the money in the space. I think the key thing that determines whether this is structural is regulation, i.e. big players staying on the correct side of regulation, and then the new entrants, of which we do expect to be some, coming up with responsible products. I think the worst case scenario is one where you get, akin to vapes, illicit pouches, super high nicotine strengths, very aggressive flavors aimed at the teenager perhaps, so that's where it could go astray in our view. But for now it's very much looking like the industry is behaving well, and as long as they keep getting the message out there, I think there's an increasingly, open ear from investors.
And Huub, I know you've had various types of experiences in-house, obviously corporate affairs, but also some related to taxation and certainly sustainability. What trends have you noticed in the last few years, if you may share some of your experiences in terms of the intersection of investment in the nicotine space and innovation?
Yeah, I think I agree with everything that was said before. I think, of course, the sector was uninvestable for a long time because of the stigma and because there was no differentiation between smoking and nicotine, basically. I think also with the whole trend of ESG and tobacco being a relatively small sector in the whole investable market, it was an easy way to tick the box on an ESG investment and basically say, yes, we are ESG, we are excluding this and that sector. And so if you look at a lot of the ESG investments, I mean, it was about excluding weapons, tobacco, coal, and that was it. And so that was easy to do because the sector is small, it doesn't impact your performance very much. I think also, until maybe 10 years ago, there was little understanding among retail investors in particular, but in general, that not every tobacco company is the same. There are differences in behavior, products, performance, ESG, sustainability, and so forth. And as long as you group all companies in the same front, it becomes very easy to exclude and difficult to invest. So I think also still today there is in fact a lack of easy investment products for a retail investor to invest in if you want to go into, let's say, responsible nicotine and tobacco companies. And so I think that is, in fact, I think there is a market for that.
But coming back to what Derek and some others have mentioned today, wouldn't that be the ethical and responsible thing to do, though, to invest in particular in intellectual property and innovation in a space that actually saves lives? There is a contradiction here, isn't it? Who wants to address it?
I'll take that. I mean, I guess right now it comes back to the stigma point and the ability to make money it's a lot of these smaller companies that are innovating, that have IP, etc., and having the ability as a smaller company then to get a return on that investment in a market which is very fragmented, where there is huge regulatory risk and where there is these misperceptions around nicotine and the lack of education around that. So I think and then you throw on the ESG angle, I think right now it becomes a risk too big to take. But then that's why I think, to the point here, we do need more publicly listed, pure play, reduced risk companies that are not selling cigarettes, and therefore you're less relying on private equity, etc., to put that money in. You can actually raise money in the public markets then and go about it that way. But there is a significant lack of public pure play RRP companies right now.
And there are obstacles to that. I know from my personal experience, some of my previous clients actually were speaking to investment bankers, years back to try to see if they can go public, and time and again it has been the desire of one after another company, and with very few exceptions, and those actually still had some of the old tobacco products. It was really very, it was impossible, basically. We do have quite a bit of time for questions from the audience, and I'm mindful of the fact that this is your last opportunity to ask questions right before, the end of the conference. And by all means, I think we all will have questions. So who would like to start? There is someone with a microphone coming towards you. Thank you. Oh, if you don't mind, I know we didn't do this before, but it might be helpful to introduce yourselves. I mean, I know you're quite well known, but just for the benefit of those who've not been to this conference before, maybe didn't pay attention.
All right. So I'm Charles Gardner, and I'm a consultant now. And at the risk of asking you to repeat yourself, since you mentioned ESG, I have been saying for years that every, let's call it, responsible vape firm or responsible safer nicotine alternative firm is a social enterprise. It fits the definition. A social enterprise, preaching to the choir probably, but it's trying to do good and do well at the same time. And by doing well, it makes doing good sustainable. There are a large number of social impact investment funds that we used to turn to when I was working in global health. They're very active in Africa and Asia. Is this at all, is the concept relevant, and has anyone portrayed, say, a vape firm as a social enterprise? And would that help to turn the opinions of some investors?
So at the moment, I haven't seen yet the more kind of social ESG-oriented funds quite yet make the foray into nicotine. To Owen's point, the stigma has gone down, but not to that extent. I think the key reluctance at the moment from these ESG-type investors would be the tightrope the industry is walking at the moment between getting people off of cigarettes and towards the lower harm alternatives, which is increasingly understood, and then the concern that some of the products might also be recruiting new users into nicotine. And I think that's where you might still encounter quite a lot of resistance, especially from the more ESG-type investors. That being said, again, direction of travel in terms of perception has been very positive. If, for example, pouches, which we've been talking about, are shown to have very low risk effects kind of 3-5 years from now, it could get to that point, but I think honestly it's still early days.
Huub, maybe you wish to add something?
Nothing to add, to be frank with you. I think it's, very often I would say people are on the fence and saying we first wait for evidence from regulators that this or that product is less harmful. I think the other, I understand your point, Charles, about a company which only produces e-cigarettes. I think certainly, I can't talk on behalf of PMI, but certainly the bigger tobacco companies also still sell cigarettes, and there are reasons for that. But that makes it even more difficult, I would say.
And Owen?
I'd echo a lot of that, really, and I think it comes down once again, it's to, while they may be ESG and about driving social change, a lot of these funds don't necessarily believe right now that these products are safer than cigarettes. And I think until we get continued scientific evidence around that, until we see large national regulators support these products and start to educate people, then that's not going to change overnight. And so I think that's one of the critical things that needs to change. People need to become educated. These products are safer than cigarettes.
But isn't there a double standard, though? And actually, while I was listening to Mattocks speak, he mentioned something we're all familiar with, all of us who do advise the cannabis industry, the level of testing and the max on heavy metals and pesticide residues and so on that cannabis companies, for instance, have to undertake, in terms of testing, and they're mandatory, they're true at state level. But then, just out of curiosity, I looked up, the FDA maximum heavy metal levels on certain crops, foods that we eat, all of us, every single day, and there are none. And I'm thinking, isn't that a double standard? I mean, how many people are exposed to cannabis, or for that matter, to vaping or nicotine pouches? Still, the percentage of users is still small. Maybe it's going to be, 15% of smokers in the US population, 100% of eaters. So what do you make of that? And isn't it too ambitious to hope that regulation or regulators will all of a sudden embrace products? And what was the difference in the cannabis industry that people were still not put off by that strict regime and regulation? What do you think would help the nicotine industry to overcome that?
I think, just to go back to the last question, I do think in some respects some of the youth trends in vaping is still relatively recent, and so that's probably in memory from a messaging and perception perspective. I think I'm not as familiar with what the testing regime looks like in nicotine vape, but I think, some degree of regulatory stamp of approval that products are safe. I think it gets really clouded given there's so much illicit, and this is new to me because I see it in cannabis, but the amount of illicit products in the tobacco nicotine space is substantial. So I think part of it has to do with it's hard to control the channel because you have a lot of folks who are incented to just sell, unsafe products until they get stopped. But I think, some sort of, to what Huub was saying, some sort of a regulatory framework that, is worth something.
And that's not easy to change. Who wants to take the next question or ask the next question? All right. Well, I do have questions of my own. I apologize. I feel so privileged to ask you all of that. I did mention very briefly at the beginning, but didn't press the point in terms of venues or platforms where the investment community, and not necessarily the sophisticated institutional investors, because those know very well which stocks to invest in and have traditionally obviously followed the market through analysts and their own some of their own divisions, but rather more VC or private equity or any other forms of investment. What would be a good platform for the younger companies, such as some of the companies that are present here today, to engage? Because just to set the stage, and I know most of you know, perhaps maybe not Mattocks, there are a few conferences every year. This is by far the most intellectually diverse, I think, and maybe less commercially oriented. Others are more scientific or purely scientific, and it's very abstract for an investor to go to a Coresta meeting or even a TSRC meeting and hear very, very interesting and yet quite not actionable studies results being presented. What other venues would you suggest for the younger industry, the newer product industry, the IP geniuses in this room, to actually reach out for investments or for investment platforms? Where should they go? How should they organize themselves? Where do they find the investors, rather than, knocking from door to door and hoping that someone will help?
I can have a go at that. I mean, it's, I think given the state of play right now with kind of major institutions, maybe kind of looking at family offices, there are certain kind of VC firms now that do specialize on Vice, etc. And then at Plexa, now, I mean, we are employing essentially a PE roll-up strategy, buying up independent companies globally. And with that, it's retail chains, brands, distributors, and then even in that, in terms of giving help with distribution, we will then potentially talk to brands and help them distribute and get into other markets as well. So, I mean, that's possible options. But I do think it's very difficult right now to go to major institutions and look for investment. So I think you kind of have to think out the box a little somewhat.
And Mattocks, what's your experience? How do cannabis companies go about finding capital?
I think it depends on the stage of the company, whether it's de novo kind of seed, which is obviously higher risk than something that's in market more well established. But I think like one of the overarching questions that should be asked is who should care about what I'm doing. So when you think about these industries, highly regulated, looking for folks who have had success investing and or operating businesses in adjacent markets. As an example, in cannabis, many of the alc-bev distribution companies that were started by families see their core market eroding to some degree and sort of thinking, okay, what are ways for me to hedge some of the headwinds in bev alc, for example. Let's look at cannabis potentially. So I think you got to figure out who should care about what you're doing, whether that's an individual or a family office that made its money from pharma or highly regulated industries. It could be any one of those things.
And Andrei, I'm curious, what are some of your clients or who is really most interested in your experience, in your reports and in your analysis? Do you see interest from, if you can just describe the portfolio of clients that you have.
Mm-hmm. Absolutely. Short answer, thankfully, would be almost everyone at the moment is interested in nicotine. So essentially, US investors very, very active in the space. What surprised us perhaps when we launched our coverage of the space 3 months ago was how much more open to investing in nicotine investors from the UK, the big institutionals, from Germany, which is very surprising, and then from Southern Europe as well. All these demographics have become much more open to nicotine. I'd say the only holdouts from an ESG perspective at the moment, and they're becoming the exception rather than the norm, are Scandinavian investors and French investors. So they still essentially have a blanket ban on investing in global nicotine. Otherwise, it's much more open, and just to be clear, it's not short-term speculative money, it's long-term structural investors. So this to them, for them to invest actively, it has to be a 3-year, a 5-year, 7-year, 10-year story, not a 6-month story, which says a lot about, again, how perception has changed, how the sector's image has changed. And then perhaps on a lighter note, what might help as well is just how many of these investors are using nicotine pouches at the moment.
That's a very good one. I'll follow up on what you said. So Scandinavia, by Scandinavia, I suppose you mean Sweden as well, right?
Precisely.
That's shocking.
It is shocking, right, given the fact that
The
Sweden
heritage.
is obviously the first country that is formally smoke-free. We do have 2 more questions. If you can so kindly pass on.
My name is Mark Tyndall from Canada, and as I really push the harm reduction part of this, and that's what my public health hat wants. I understand that we need tobacco companies to do this, if it's going to happen in a fairly short period of time. We have to engage with big tobacco companies, and I think as far as the stigma goes with it, I think there's room to turn things around, sort of like sort of like the PMI website that by 2035 we're going to get out of the combustible cigarettes altogether. I think there's always an asterisk there, kind of if the regulators allow us to, or that's kind of thing. BAT, I was at a presentation, and they said they're going to try and get to half of their revenue by 2035 from non-combustible. So that's, to me, that's not commitment to get rid of your combustible cigarettes. But if you want to gain, and I can't speak for investors, but for the public health community, if you want any buy-in and engagement, I think we have to be convinced that there is a real plan and that this is how many factories we're going to close down by this date, and this is how we're going to move it, and a really really determined effort. And I think tobacco companies have shown through a century that you're pretty good with challenging regulations. And so you should be able to move this along, I think, if there was a good plan. But I'm sort of not convinced from any of the big companies I've talked to that they're really committed. The slower the transition happens, the happier everybody is, I think. And I think to get the ethical part of things on side, I think public health is really looking for really solid commitment that this is going to happen.
Thank you for the comment. We did get to the end of our panel, and we do still have one more closing speech by Dr. Yach. So I'd like to take this opportunity to thank the panelists. And of course, as I mentioned on the previous panel, they're still around. They will be available to take questions, and you can all follow up with them afterwards. Thank you very much.
Thank you.
Thanks, Patricia and everybody. And I know that we've got a very hard stop. I'm not sure what happens. I think the chandeliers collapse on us in 4 minutes, and the elephant jumps off the hall, or something terrible happens. But let me really just be extremely brief and say, what are the top line takeaways I think I heard from this meeting, and maybe a clue as to what I'm hearing we need to be doing next year. We're really talking about next year. Mark, fantastic. One of the great high points. Come back next year with your book on oral nicotine pouches. It's a very powerful book for us to get out and ensure we use for disinformation ending. And I hope you'll use an AI system to get it translated rapidly, which is pretty easy to do and get out. Second, I think the spotlight on trade tariffs is just the start of where we will be digging deep next year. By this time next year, we'll hopefully have a deeper insight into what is the complexity of the tariff regime that's been restructured as we speak. And to my mind, the purpose of doing that isn't theoretical. It's to be able to answer the simple question, how will this benefit or not benefit consumers trying to end smoking or reduce their risks? And that differential across all the different subparts of the supply chain will be something that maybe we could even think about doing with some of you who presented as a major report next year. I was pleased we had the focus on the neglected smoker, and I think Huub's data is really worthwhile looking at, showing that it does appear that Japan is making faster progress in other parts of the world. But I also cited a study that I hope you'll go back to, and I know that there are others looking at how the amount smoked and the age differentials, the older, heavier smoker, need to become a greater focus of our attention. The other big thing of neglected smoker we didn't address, which I'm certainly going to work very hard with my colleagues, Martin, Kylie, Robert, Michelle, to make sure we correct next year, is the huge needs of low middle income countries, which I think we need to give greater focus to. Just an aside, I love the e-vapor discussion on the UK million. That is the kind of thing we want to see worldwide. On the oral nicotine discussions, I think that was more than timely. I think having Jeffries lead off with such a bullish sense of where the markets are going is fantastic. And my takeaway there was, let's not mess this up. We're off on a great trajectory. Those who want to try every type of pouch, please constrain yourself and stick close to the science. Those looking for innovation on how you deliver the nicotine through films and other things, that's what we want to see, sprays. That's all fantastic. But stick closer to the scientific interface. And that does include get the child-resistant stuff done. Let's not talk about it. Let's have it available. And by the way, I was saying to one of the colleagues here, let's see if that's not an area where the large tobacco companies or pouch companies would be willing to co-license the technology of a child-proof thing to some of the smaller nicotine pouch companies, as happens in other fields of consumer goods, since there is an obvious public benefit and there shouldn't be a commercial gain from having something that gives you a greater degree of safety. I think that if you were to engage with some of the larger companies, I think you may very well be surprised that they're willing to engage because they're not going to be competing. And then finally, in that section, I was really thrilled to hear the excitement about the nicotine in the aging brain. We know it's real. We know that it's not just Huub. I mentioned to others that Nora Volkow from the National Institute of Health has been writing about the benefits of nicotine for the aging brain, one of the government's official people in her own documents. The MIND study, many others are out there. We need to have a major session on that this next year. And then last but not least, I obviously can't resist ending with Inhale, which I think is wonderful. I hope it wins. I hope we get out there fast. I just have one little twist. I think you did focus appropriately on how the consumers are demanding it. That data was fantastic, and I want to look at it. But the real reason why I really think strategically we need to be pushing harder on medical licensing is less my interest in the consumer, where everything you said applies, but it's to actually get the physicians on board. Now, let me just remind you of one thing that people often forget. When we look worldwide over the course of 60 years, there isn't a single country in the world, not one, where the smoking rate in the general population has gone down before it goes down in the doctors, and before the doctors don't understand the importance of acting. The same general issue is true for any technology introduced into the medical practice. Doctors are conservative. They take things slowly on board. It's tough to get them to move. Look at the levels of disinformation they believe about nicotine and cancer. If you reverse that, and the only way to reverse it is by having a medically approved product, and you all don't have to do that, but we do at least need to have a wider variety of, we can call them whether they vapes or NRT type products, and on the pouch side, particularly in those two categories, we will have a halo effect that will allow the physicians to feel that they can comfortably support the product, not just on the interface with their patients, but in the policy realm, in the American Cancer Society, in the international societies of heart and lung and respiratory disease, the psychiatric society, the mental health, the dentists. So that is, for me, the bigger win, is to think about the physician as the gatekeeper to changing the regulatory process, not the consumer. They're already out there. They're already voting with their purchase power, but we need to think far more deeply about that interface. With those few words, I hope you'll join us, and I know that for some of us, tonight is the first night of Rosh Hashanah, the Jewish New Year. It also is a good time for us to recognize that what we start tonight, and I hope you'll join us in doing, is atoning for the many sins we've committed over the last year. And I recommend people look through the list of sins that some of us are going to try and atone for. It's very long. It's very long. And at the end of it, we'll all come out with a better spirit of how we can work stronger together for a new year and tackle what we believe is one of the greatest potential improvements in human health, ending smoking. So thank you.